The AI boom has been an incredible ride these past few years, but as we head into 2026 with record high valuations, I'm reducing some of my individual AI plays and moving towards a resilient, cash flowing portfolio that supports the very physical world AI is now beginning to automate and macro trends using covered call and standard ETFs. Welcome to Epic Finesium Odyssey. A quick reminder, this video is for informational and entertainment purposes only. Nothing here should be used as or construed as financial advice, and I am not a financial advisor. These are simply the moves I'm considering and planning for 2026, while I continue to hunt for deep value plays on undervalued companies that I believe will help transform the future. Why the pivot to ETFs? Because in 2026, volatility is part of the game. Diversifying into broad-based and sector ETFs and utilizing covered call ETFs, I'm building a buffer against downside risk. ETFs help shield me from any single poor-performing company, while covered call ETFs generate consistent cash flow through option premiums, giving me liquid capital I can redeploy when I find undervalued gems later in the year. Looking back a couple years, history also shows us that covered call ETFs had smaller drawdowns compared to their underlying ETF. I'm also diversifying into the application of AI, specifically robotics and autonomous vehicles. In 2026, we're moving past chatbots and into physical AI. While I will continue to invest into select individual companies I believe in, I'm also looking at ETFs that capture the companies building the sensors, the vision systems, and the robotic labor force that will define the next decade of productivity. To power all this, we need energy. I'm eyeing MLPs, or Master Limited Partnerships. These are the pipelines and infrastructure that feed our power-hungry data centers. And by using MLP covered call ETFs, I get to capture those high yields while receiving a standard 1099. This means I get the income without the complex K-1 tax structures of individual MLPs. AI energy needs will likely not be the only bullish factor for oil. Let's talk precious metals. Demand for these metals is surging, but don't overlook the logistics. As the global demand to move and secure these precious minerals grows, it increases the demand for oil to power the ships, planes, and security fleets that move them. The success of sound money actually supports the energy sector. Of course, there are downside risks, such as moves towards using nuclear power and renewable energies, and the possibility that there won't be demand for the AI data centers being built right now. But I believe there is still room for growth in oil usage in the short to medium-term horizons. Energy is what powers our industries and connects us. Gold and silver have rallied in 2025, and the word on the street is that governments will continue to buy precious metals in 2026. As countries continue to keep interest rates low and debase currency, people will also be incentivized to hedge using gold and silver. Silver also has industrial applications, which should continue to increase demand. While I believe gold and silver will continue to appreciate, I don't typically enjoy holding onto assets that don't continue to create value. Traditionally, holding gold and silver pays you nothing, but with gold and silver covered call ETFs, I maintain my exposure to the metals while generating monthly income. In the case that the prices of the metals decline, my holdings will continue to generate option premiums and soften the fall. Instead of just hoping for a price spike, I'm getting paid to wait. It's about turning a static asset into a cash-flowing machine. Note that this will still be a very small percentage of my overall portfolio because of risks outside my purview. Of course, there are risks to my plans in 2026. Covered calls can cap your upside in a massive rally, and industrial demand for metals can shift. But for 2026, my goal is sustainable, cash-flowing resilience. I'm staying on the lookout for undervalued companies, but I'm doing so with a portfolio that pays me to stay in the game. The increased cash flow will allow me to pivot and be flexible as markets continue to be volatile. That's the 2026 roadmap. Diversified, defensive, and powered by the infrastructure of the future. In addition to these pivots, I will continue the status quo of continuing to put money into broad US and international ETFs. Let me know what sectors you're eyeing in the comments. See you in the next one.